Hey everyone, welcome to Market Talk, actually number one. So this is number one with the Pinnacle Partners Group, brokered by EXP. Myself and my partner Jeffrey Kalafut have joined forces to build an organization inside of EXP to help other agents and also to continuously serve our clients at the highest level. So Jeff, how you doing, my buddy?
Awesome. Excited to finally get this thing rolling and announce the partnership and push forward.
Awesome. And also today we have Robert Snyder from Silex Financial. How you doing, sir?
Doing well. Congratulations, guys, on the merger. It's awesome.
Thank you. Thank you.
Thank you.
And Joe Valente from Tabatchouk Law. How you doing, buddy?
Doing well, Jeff. Good to have you. Welcome. Congrats to you guys.
Thank you.
Awesome, guys. Well, like always, we are here to kind of break down what we're hearing in the news and give you perspective on what's going on in the market, and try to basically cut out some of the noise and give you the solid facts and perspectives of what's happening now and what potentially can happen in the future. So, like always, Bob, since you are completely disrupting the real estate market by you keep increasing rates, how about we start with you?
I increased rates yet again. Yeah.
Thanks, bud.
We thought we were going to settle in. Rates over the last couple of weeks have steadily increased. Some places we saw them in the low eights on a 30-year fixed. So they've settled back down a little bit, but we're in the mid to high sevens. And like I said, I'm sure there's some lenders out there that are even higher than that. So rates have been difficult. But again, it's more about, I've said it all year, more about the payment. And, if you wait till next year to buy because of the rates, you're just going to pay more for the property.
Right.
Right.
Yeah, it's kind of like a double-edged sword. You're damned if you do, damned if you don't.
Yeah. At some point, though, you'll be able to refinance, we would think. I mean, I can't imagine they're going to stay in the sevens and eights forever.
Mhm.
So just get them, like we said all along, get them with a comfortable payment in case it's years before you can refinance. And at some point, you'll refinance and your property will be worth more.
Right. Bob, are you hearing any rumbling? What do you think the number one driving factor is right now because the interest rates are continuously climbing?
Meaning, why are they continuing to climb?
Yep.
People still believe the Fed's going to increase rates again. They haven't. The economy is still stronger than expected.
Hmm.
So every time a new report about jobs being strong or higher inflation comes out, it just pushes the bond market, and everyone expects another rate hike. So that's what's causing rates to continue to go up.
Gotcha.
And they're not expecting. They used a while ago. They were saying 2024 early we would see some rate cuts, but now they're saying end of 2024, maybe 2025 for rate cuts, which of course causes rates to go up as well.
Right. So if inflation doesn't come down or settle, I said this I think last month and a half, if rates don't come down or inflation doesn't come down to around 2% for a longer period of time, and it keeps fluctuating between, say, in the threes or fours, then we're going to see higher rates for a long period of time because that needs to settle.
Yeah, the Fed is focused on that 2%.
Yeah, and it's got to sit at that 2% for a while.
Yeah.
So yeah, we might be in for a little longer, higher rates for a little bit longer time. So we're just going to kind of weather the storm in regards to that.
Like I said, I mean, if you think that the values are going to continue to go up, and I'll put that back on you and Jeff to tell me what you think. But if you think the values are going to continue to increase over the next couple of years, then I worry less about the rate and more about getting into something sooner than later.
Yeah, for sure.
Yeah, I think it's going to continue to climb. In the moment that those rates tick down a little bit more buyers are going to enter the buyer market. Supply and demand is what we're dealing with right now to begin with. It's going to just push those numbers to levels, quite honestly, that I don't think we've ever seen yet. So it's going to be interesting for everybody for sure.
Yeah, I agree with that. Um, Joe, what are you seeing in regards to, transaction wise? Is it, in the city? I'm curious if you're hearing. This is a side note, but we'll maybe get into this a little bit later. Maybe talking about Airbnb and what the city regulations have done in regards to that. And then are you seeing maybe more inventory pop up in the city because of these new Airbnb regulations? But well, that's a side note. But anyway, what are you seeing transactional wise between New Jersey and New York? Are you seeing an uptick? Are things getting a little bit easier, or is it an all out gauntlet in trying to get transactions closed because of, the skin's a little thin right now?
All right. New Jersey's just been unpredictable. There's really no rhyme or reason. There'll be a week, maybe because of a little inventory pops on. There'll be a week where a number of transactions come in, and then it'll be pretty quiet for a couple of weeks. And that process has been rinsing, repeating for like the last 6 to 9 months. Hard to find any type of legitimate explanation other than in a certain township, a few listings may pop on and they get quickly eaten up, right? So it's kind of what Jeff hinted at this. I don't see any indication of prices coming down at any point. They're only going to climb upward as more stuff comes on the market. There's going to be more competition for it, and I don't see this ending anytime soon. Unfortunately, I wish I had some good words to put onto the spin.
Right.
But New York's a more consistent animal, especially the city. You don't have the same inventory issues that you do in areas like New Jersey or Westchester or Long Island. The more rural areas always struggle with the inventory a little bit more for whatever reason. In the city, you have a lot of cash buyers, you have foreign buyers. There's just a lot of people moving out of the city. A lot of people hold properties as investment properties. It's just a different animal. So
Right.
it's just more, it has tougher skin, the New York City market. It can withstand a lot of things, I guess.
Sure. Yeah. It's got, a lot of people coming in and out constantly, and that's never going to change.
Yeah. But as to Jersey, it's just, you can give a bunch of different explanations as to why the market is the way it is right now. I think the overriding consistent theme that we've been stressing from the beginning of these talks is that until the spread of the interest rates for sellers, what they currently hold and what they are, you're not going to see them put their house up for sale. If they refied into a 3 or a sub 3 and the rates, I don't think the difference of a 7 and 8 affects the real estate market. I really don't. No. I think we need to get below 7, maybe to 6, so that spread between what the sellers are giving up won't be so large, and then they'll be more willing to sell.
Yeah, I agree. I don't think 1 or 2 point drop is going to be a driving factor. I think what's going to be a driving factor is just family circumstances is going to be more. It's going to be stronger than actual interest rates making moves.
There's got to be some like external force that we're not currently seeing that's going to drive
for sure.
Shift.
Yeah, we're in a very interesting situation. I'm going to share a slide real quick. Can you guys see my screen, the slide?
Yep. Yeah.
So in August, which is interesting, and people talk about seasonality in regards to real estate and inventory, but in August, because these are obviously the previous year trends of inventory, we actually saw an uptick in inventory in August. So I'm really interested to see if, September and October are going up as well as inventory. Is inventory going to increase? Because, we've mentioned that like seasonality doesn't even matter anymore, right? And this is actually an indicator that may be the case right now. If people got to make a move or I think people need to make things happen, they don't care what season it is anymore. So we're seeing an uptick in inventory nationwide.
That's interesting.
Any idea, any theories why we're seeing an uptick?
I don't know. I wish I knew.
My gut reaction on that is the fact that there's such a pause in the spring on what people are doing, and they weren't sure what they were going to do. And I think that this is just the rebound effect a little bit. Because there's always that spring market, right? People want to showcase their properties when the grass is green and the flowers are in bloom. But something like this, you know, and I can speak from my own experience with my listings. I have people that want to sell and we're waiting and waiting. And the conversations we're having are, is that going to impact anything? Should I wait for this? Should I wait for that? I'm like, no, there's no inventory. The competition is so slim. So it's not gonna matter. We're not gonna be, you know, if we wait another month, there's not gonna be another 20 homes in that neighborhood on the market. It's not gonna happen.
Yeah.
So I think people are waiting a little longer. They're preparing their homes a little bit better than they would have, and that seasonality is at the door.
Yep.
I think you're always going to be heavy spring, right? Because people want to, you know, have that. But normally we're a little heavier now too, like going into the fall, and then it just drops. So I'm curious to see what happens in like really late November through February is going to be the telltale sign.
Yeah, I think that's a good time to put your house on the market in this market, right? Because
it's a great time.
You're the only one.
Yeah.
And that's not far from the truth, Bob. You know, this is a great time to put it on the market. There's no inventory in most of these towns in our area.
Yep. I want to show this next slide. I found this really interesting. So there's in the United States, almost 40% of the United States own their home free and clear. That's crazy. That is a lot. That is a lot of equity out there just sitting, you know.
Should have made us guess. I would never have guessed that high.
I should have made you. You know what? Maybe we'll make a trivia. Maybe we'll do a trivia segment. But that's crazy. You know, and you know, some people are doing nothing with that equity. You know, some people are investing, and so
that statistic right there, that's probably the solution to part of the problem we have that's not being tapped into. It's, you know, people that own their homes free and clear, you know, not across the board, but a large portion of them are going to be older in age.
Yeah.
They're sitting on a house that doesn't have a mortgage, and they should be selling it and relocating into, you know, downsizing and using that equity, using that money they get from the sale to kind of live out the rest of their life. And
yeah.
There's not a lot of education in that area right now, to be honest.
But again, I think what the part of the problem that we're dealing with is the limited inventory to where they're going to go.
Right.
Yeah.
If they don't,
you know, and that's the trade-off, because, you know, we see it all the time in the marketplace where you have, say, like that traditional, like, you know, 3-bedroom, 1.5 ranch that, you know, it could be a starter home for somebody, or it could be somebody's downsizing from their, you know, larger home and just going to live out their life on one level. Well, the number of offers we get on those properties are astounding at times. You know, I mean, I sold one in Warren County that we had over 40 offers and it went 100,000 over ask.
Right.
Do you think it may unlock the problem though? Like if more people that are owning their home free and clear put it up for sale, other potential sellers may list their homes because there's more. It's kind of a ripple effect. And it's almost like I'm not doing anything until I see what you're going to do, and nobody's doing anything.
Right.
I've been saying that for the past few years, actually, Joe, because there's a number of people I've had conversations with that, like, I want to really maybe sell and, you know, downsize or get a bigger home, but I don't know where to go. And all those conversations, I'm having them. I'm sure Jay's having them. So many agents in the industry are having those. If I keep saying, if all of us would just list those properties all at once, it would eliminate a lot of the problems we're seeing right now. They're there. People are there. They want to move. It's just that fear factor. Where am I going to go?
Right. But also, as soon as that starts to sway in one direction, then we're the psychology of FOMO, right? FOMO is going to kick in, and then everything's going to be on the market, right? Like no one want to miss out on the neighborhood.
Yeah, I think we live in I think there's a huge number of first-time home buyers out there waiting to buy because they haven't been able to either afford or can't find anything. So I think that's a big part of the problem as well. So even if that happens, you have that huge 30-something population that is just waiting to buy or trying to buy.
So I'm curious. I would like to do, you know, I would like to know the number of the 40% of homeowners that own their houses outright. Out of that 40%, how many of their children are living with them in the house as well? Because there's, you know, that could be a factor in why they're just going to sit on it, right? It's going to be interesting. But let's go into my last slide of the day. So here we go. End of year price forecast. So they think it's coming in as that we are, the last 2 years, or even almost the last 6 months, the overall appreciation has been through the roof on properties. These are different forecasts of end of the year. What some organizations are predicting. AEI is 6%, Zillow 5.5%, Fannie Mae 3.9%, HPES is 3.3%, MBA 1.5%, and NAR is -4% in appreciation by year's end. I'm probably in the three. I think it's going to slow down. Appreciation is going to slow down, especially if the interest rates are going to continuously climb. I do not see it. I don't predict a negative as NAR would. I'm not in that boat whatsoever. But I don't know if I'm a 6 either. That's pretty high in regards to appreciation by the end, end of the year. So there is I don't see, like, Jeff, like you mentioned as well, like, and obviously all of us talking about it, that, like, yeah, our appreciation is probably going to average out. Our national average is probably around 3.5 to 4% year over year, right? Yeah. When this interest rate finally comes down, I would not be surprised if we're back at a 6% appreciation rate year over year or more. So if buyers, first-time home buyers, or anyone who's like, hey, I really need a house, I still agree strategically that it is smarter to get in now than it would be to wait. If you don't have to wait, then I wouldn't, overall. So
well, these are national averages, remember, and I think that we were a bit of an anomaly in the Northeast.
Yes.
100%.
I know there's a lot of areas that are slumping right now. It's not really slumping in the Northeast. So I kind of think it's, if you're looking at 2023 year-end home price forecast for New Jersey.
Yeah, I agree.
I think we're in that 5-6% range.
Okay. I think I agree with you. I think it has to do with obviously location in New Jersey and also price point in New Jersey as well. But I agree.
The Northeast is probably carrying those numbers, right? So they're offsetting a lot of negatives elsewhere.
Yeah.
I'm shocked that NAR has it at 0.4% depreciation though. I don't know where they would come up with that.
I don't either. That's like, we haven't seen that in years.
Right. That doesn't make any sense at all.
It almost sounds like they were just throwing a dart. And
they're just trying to be cool. They're trying to be different, right?
Yeah.
There's always got to be one different prediction.
That's it. So like always, we are in a very interesting real estate market, and we're just kind of waiting and see. But I think the overall consensus of us getting together and analyzing the information is that if you can sell, obviously sell now, capitalize on the market. And if you can buy now to capitalize on the market, and then, refinance when the rates eventually, hopefully, do come down. So you're going to refinance, lower your rate, and also the appreciation year over year of your home will continuously go up and increase equity as well. So, yeah, I mean, any other thing you guys want to touch base on or talk about, or anything that we didn't cover that is current right now in the market?
No, I think what we'll start talking about a little bit is lenders pushing back and tightening belts on some of these programs. Things are going to get a little tougher. I think they're starting to get worried about buying back loans and foreclosures down the road for people who are overbuying, which is what I go back to with, I tell my clients, pick up a comfortable payment and let's stick to it. But I think we might have that issue going into 2024. I've seen a lot of the lenders getting a little more difficult with getting some of the loans through. So that'll be interesting to see if that changes in 2024 and gets the belts tightened and the guidelines get a little stricter.
Interesting. Do you think the big banks are feeling a little vulnerable right now? Is that why you think they're going to kind of make things a little bit tighter?
I think that the investors are pushing loans back to them a bit. So I think that's what's going to happen. They don't want to get stuck with any of these loans on their books, and their investors are getting a little bit concerned or tightening the belts a little bit. So yeah, it'll be interesting. It'll also be interesting to see if any of the smaller lenders go out of business. I'm surprised we haven't seen it because there's not enough business to go around for all of them.
True.
Right? I mean, we're seeing an exodus of the business. Some realtors are leaving the business. Some mortgage advisors are leaving the business. But some of the lenders, I'm surprised haven't started to go out.
Hmm. Well, I mean, if things keep going the way where they're going, that might just be the
it's the
case.
next step. A lot of
you're going to see a lot of that consolidation.
Mm.
Yep.
Sure. Yeah. I mean, my experience with the banks right now is, especially in New York, where every lender, every deal with financing is repped by a bank attorney. But the lenders are just, they lay a lot of people off. That's the initial reaction, right? So that's kind of you fend everything off for a while doing that. They're short staffed. The bottom line, like every loan is so difficult to process because they don't have anybody working on these files. But that's the initial defense to business slowing up a little bit.
Yeah. I had someone tell me the other day that they came back to them a month after the loan closed for more documents. And that's an example of the investor pushing back on the lender, and the lender then having to go back to the client after they close to clear up some things.
Wow.
Yeah.
In order for them to sell the loan. So
Interesting. Interesting times for sure.
always.
Always. All right, gentlemen. Anything else you'd like to add before we jump off here?
No.
Satisfied.
Yeah.
We nailed it. No, dude. But awesome, guys. Well, thank you everyone for joining us today. As always, it's always a pleasure, and look forward to the next one. All right, everybody.
Take care.
Take care, guys.
Bye, guys.